everyone, this is Business Day right here on ET Now. I'm Avan Dabash. How did the markets pan out this Friday? Well, certainly a smart day of gains on the first day of the new series, but we did witness a bit of profit booking which set in toward the second half of the session. So the Nifty did shut shop slightly below 5,100 at 5,099 and the SENSEX higher by 199 points at 16,839. It was banks, metals and FMCG which shone in trade today with volumes at close to 1.5 lakh crores. For the entire week though, it was down by close to 2% for the key indices. A big day when it came to results. We'll get you all of that plus the top stories after the top headlines. India's largest private lender, ICICI Bank, reports a better than expected 36% jump in its first quarter net profit, boosted by strong interest income. The bank's managing director and CEO, Chanda Kochar, says asset quality has improved considerably despite hostile market conditions. State-owned banks take a beating on concerns over the deteriorating asset quality. Punjab National Bank restructures loans worth 24,000 crore rupees. Union Bank and Bank of India also see a rise in their bad loans. The Enforcement Directorate tightens the noose around Vodafone. The ED says that the British telcos breached the 74% foreign investment cap through a complex shareholding pattern. India's monopoly watchdog may loosen its teeth. Sources say the competition panel, which recently imposed a hefty fine on cement makers and real estate major DLF, may be barred from policy intervention. A pretty strong day for the benchmark indices, so it was higher by just about 1%. Though we failed to conquer 50-100, we were trading at that level for most part of the session. But you can see a stark difference in the way the broader markets performed today. So it was an underperformance for both the mid and the small cap index, and that too by a good 1%. Let's pull up some of the sectoral indices then. You had the metals pack as well as FMCG. They held out very smartly throughout the entire session. But on the downside, it was the real estate pack which was a bit weak, as was the PSU sector. Index gainers came in the form of the entire metals pack, which gained after the recent decline. And you had gains coming in despite S&P revising its outlook to negative from stable. So the likes of Acesa Goa, Tata Steel, as well as the Tata Motors from the Auto Pack and HDFC Bank held up pretty smartly today. But in terms of big earnings, you had the country's largest private lender, that's ICICI Bank. It surprised the market with a higher than expected 36% growth in the first quarter earnings at 1,815 crore rupees. Now this of course was driven by a strong net interest income as well as expansion in their markets. Let's hear out the management, Chanda Kochar, Managing Director and CEO of the bank, on the numbers.
While our total growth is 22% during the quarter on a year-on-year basis, within that the domestic corporate loans have grown by 28% and the retail book has grown by 10%. What has driven the growth in margins is of course an improvement both on the domestic side as well as the international side. On the domestic side, our basically yield on yield earning assets has gone up both on investments as well as on loans. On the international side, our NIMs have improved to 1.6%, which were 1.52 in the last year, or rather the fourth quarter of the last year. The outlook for the year is that having crossed now the threshold of 3%, we will definitely continue to operate at 3% or above. So loan growth is coming in the retail side. It's all mortgages, car loans as well as commercial vehicle loans. Then of course the international loans, the international loans and advances that we have from the branches, they have also grown a little bit in dollar terms but much more in rupee terms because of the change in the exchange rate. And then on the corporate side, the growth is contributed mainly by two factors. One is the working capital requirements of the companies continue to grow, and we are getting a larger and larger market share in the working capital business. And the second really is the disbursements to the existing projects which are under implementation.
Let's also hear out Anirudh Ghosh, who now joins in with more details on the numbers of ICICI Bank. Anirudh, a great set of numbers.
Well, it's a strong growth in profit for ICICI Bank this time around, a 36% growth in net profit, outperforming market expectations at about 1,800 crore rupees. And clearly, this was brought about due to a 33% growth in their net interest income. That, of course, is much higher than what people had expected and much higher than a lot of their peers as well. Also, their credit growth at about 22% has come in well above the industry average. So clearly, a strong performance as far as ICICI is concerned, as far as their loan growth and performance of their loans is concerned. If you look at their non-performing assets, that itself has seen quite a drop as well, and also their restructured book has come down on a net basis, even though on a gross basis it has gone up. Of course, this has been a factor of the fact that they've sold off all their restructured accounts to Kingfisher Airlines. They've sold that off to Shrey Infrastructure. So clearly, that has been something that's brought about a good fortune for ICICI Bank. As far as the performance of their subsidiaries is concerned as well, we've seen ICICI Bank Canada put forward a good dividend to them this time around, and also both their life and general insurance subsidiaries have been doing well. Both of them have been throwing up profits, which have been absorbed by the bank. So as far as the outlook going ahead, the bank is looking at maintaining a credit growth of close to 18%, even going up to about 20%. As far as their deposit growth is concerned, they're looking at 17 to 18%. And as far as their margins are concerned, they are looking at maintaining them well above the 3% mark as far as the overall margins are concerned.
Thanks very much, Anirudh, for breaking it down for us. In the meantime, you had a slew of other numbers coming out. We'll highlight some of the important ones. HCC, a very disappointing set. Q1 loss of 31 crore rupees versus a profit of 3 crores, with the top line also lower by 8.4% at 969 crore rupees. There was a major contraction this time around in their margins, 7.9% vis-a-vis 13.2%. TVS Motor, though, came out with a fairly okay set of numbers. The profits were down 13%, but the total income was higher by 4.2% at 1,820 crore rupees. Margins, though, were down by 5.9% versus 6.7%. NTPC declared its quarterly numbers, 2,498. That's the number they clocked in on their bottom line, with their total revenues higher by 11.5%. 16,166, a pretty happy stock, which was in the green by 1.5%. In the pharma space, though, it was a disappointment for Strides. Arcolab and the street punished the stock too, so the profits were higher by 31% at 90 crore rupees. The net sales, though, a bit of a disappointment there, given that they were lower by 12.5% at 508 crore rupees. This time around, there was an exceptional income of 94 crores and a forex loss at 51 crore rupees. But from the PSU banking lot, we had a host of numbers coming out. Let's touch upon them. Largely, you can see a big trend coming in that even though the profits and the NIIs came in line with expectations, it was the asset quality which was really what put the street to shame. So you had a Q1 profit for PNB coming in high at 13%. The net interest income also stable at 3,690 crore rupees. But the gross NPA at 3.3 crores versus 2.93, as well as the net NPA scaling up higher. Let's hear out the management then of Punjab National Bank on their quarterly numbers.
If you look at the breakup of the provisions, we have done 900 crore of provision for NPAs. Let me inform that we have been little liberal in providing this time, looking at the conditions in which we operate. So this has been substantially more than what is the regulatory provision required on this amount. If there is a stress in economy, that will definitely reflect in terms of the asset quality of the banks. So while we are concerned about the NPAs, I don't think that it's a disproportionate increase having relevance to the present state of the economy and the stress that is seen by various sectors.
Bank of India too came out with its numbers. NII is at 2,044 crore rupees. This is versus 1,841. So pretty good strength on that front. You also had the profits, which came in at 878 crore rupees. But once again, it was the gross NPA where you saw a little bit of a worry, 2.5% versus 2.3% on a sequential basis. And you had the net NPAs too, which scaled up marginally on a quarterly basis at 1.69% versus 1.4%. Let's hear out Alok Kumar Mishra, the Chairman and Managing Director of the bank, on the road ahead.
On the NPA front, gross NPA has moved up a little bit to 6,572, and it is 2.56% of the total book as compared to 2.69% of the same period last year. Net NPA is 4,413. On a percentage basis, it is 1.69. And recovery has been 861. But only thing, there have been slum slippages. Largely, they have been small ticket. And they are soft ones. I think this quarter itself, a lot of recoveries will happen. Maybe one or two accounts, they are always there. But otherwise, I do not see any major concerns there.
Okay, not seeing too many concerns, but on the other hand, Union Bank also put out its numbers, a big disappointment. Profits at 512 crore rupees, net interest income at 1822, that's higher by 14%. But once again, it's the asset quality which disappointed. So the gross NPAs at 3.7% on a quarterly basis from a figure of 3.01, and the net NPAs, those jumped significantly to 2.2% versus 1.7%. The stock price too did not take that news very kindly, and the net interest margins also on a yearly basis saw a marginal contraction, 3% versus 3.10%. Let's hear out Mr. D. Sarkar, the Chairman and Managing Director of Union Bank of India, on what he believes the bank will clock in the coming quarters.
The asset quality certainly was a concern, but maybe the sum of the few lumpy accounts which we expected that, okay, it will improve, but we could not get it. This some of the accounts which is basically we thought that, okay, we'll be able to recover. Considering the present situations, as well as the RBI also coming with various other recommendations for the new restructuring, especially the CDR and others. So therefore we thought that, okay, maybe that some of the accounts will be able to recover, but these were not a real case for the restructuring during the last quarter.
Okay, away from the earnings season, you had some of the stocks which were in news today. You had Thermax, which continued its decline, posted its dismal quarterly numbers yesterday, where profits were down by 16%, top line was down by 6%, and you have seen a very sluggish order inflow for the company, and analysts maintain a very cautious stance on this stock. Sun TV as well as SpiceJet plummeted in the session, as CBI sources indicated that the Marans were questioned on the Aircel Maxis deal. So Dayanidhi as well as Kalanidhi Maran were questioned on the same, which is why on the back of that the stock prices sulked in today's session. Deccan Chronicle Holdings also deep in the red, as the promoters pledged 3.7 crore shares to Future Capital, 18% off, nearly close to the lowest point of the day. Some of the other big losers came in the form of a Punjab National Bank. You also had SBI, which was down and out. Bank of Baroda didn't see any respite. And from high beta, it was Jayaprakash Associates that shaved off 2.5%. How did we perform for the week? Well, certainly an underperformance. So you had the NIFTY, which was down by close to 2%. The SENSEX too deep in the red by the week's end. You had some of the gainers in the form of HCL Tech, Ambuja Cements as well as Unilever, which did fairly well for themselves. On the losing side though, it was the banking space plus high beta and metals that cracked. So Punjab National Bank seeing a solid cut of 12% for the entire week and double-digit cuts for some of the other counters. Apart from that, the broader market saw deeper cuts, in fact, large part of it owing to today's performance. So the BSE Mid-Cap Index for the entire week was down by close to 4.7%. The Small Cap Index too shaved off just about that much for the entire week. We take a quick break right here on Business Day, but coming up, the Enforcement Directorate tightens its noose around Vodafone.